Hello, everyone, and welcome along to this live webinar. And today we are going to speak about finance, how you can finance your properties in general, but also using Lendlord. And joining me from our mortgage team, Simi. Hi, Simi, how are you?
Hi, everyone.
Thanks for joining, and thanks everyone. Um, Before we start, we are running a promotion. There is a promotion of the new year for the premium plan, but also for this specific webinar. So I will show you how you can use this promotion coupon, basically. So so I put in the chat finance webinar. This is the coupon. So if you have an existing account, just go to the settings page, click upgrade to premium, then put the coupon finance webinar, and it should be, yeah, and you will get 40% of our premium plan, which there are many features there, but especially in terms of the mortgages, you will get some benefits when you apply for a mortgage or bridging finance. And with the 40%, basically, you can get all the features that are in the premium plan with 59 pounds per year for the first year, and then it will be 99. So it's very valuable to have the premium plan. There are many features that can help you grow and run and grow your property business. So just feel free to use it. It should be available by tomorrow. So just take advantage. All right. So before I go to the agenda, if you watch this webinar on YouTube, please subscribe to our channel. And our channel, you can see many videos with great content about the platform. And I will put also the YouTube link in the chat. So basically, you can subscribe to our YouTube channel. All right. The agenda for today is, so we start with introduction and perhaps few words from Simi about how we see the mortgage market, the buy-to-let market, mainly when we start 2024. Then we will start demo the app to show you how you can understand your finance options for new purchases and for a remortgage of your buy-to-let properties. So we will start with how to discover which lenders are available. So based on your profile, our engine analyze the data, and you can see which lenders are available for you and which lenders are not, and what is the reason as well. Then we'll show you how you can find the best product. And we basically have integration with live products using 27 Tech. So we can show you exactly which products are now available. So also based on your profile. And of course, Simi will explain the process after that. So it's not ended there. It's basically you after that you will have discussions with our mortgage team, and perhaps you will select a different product in the end that more suitable to your profile or for your needs. But I think a lot of cases you can actually pick the product from the platform and get it. And then we'll show you how you can get notified when you have refinance opportunities. If either it's new rates that are available for you if your fixed rate is about to expire. Then we'll show you how you can apply for a mortgage remortgage online, and how you can review and track your mortgage applications using your Lendlord account. And in the end, we will have a session for questions and answers. So feel free to put your questions in the Q&A section that I think should be available for you. And we will answer, if it's relevant, we'll answer it as we go, but if not, we will have time in the end of the session. You can also use the chat during the webinar. All right, so why don't we start, Simi, with, like few words about how you see the market right now in terms of, lenders, rates, etc.
Yeah, so obviously 2023 was quite a turbulent time following on the increase in energy prices, food costs prompted by the war, and other economical factors. But inflation is improving, those pressures are improving. I know it probably doesn't feel that way yet because costs are still high. But things are getting better. So just to kind of give you an overview, we ended 2023 with inflation at 3.9%. That was in November, and at the start of the year, January 2023, inflation was at 10.1%. So the Bank of England's inflation target at 2%, the main way to tackle inflation is by raising interest rates. So when overall spending is lower, there's less demand and prices can ease. But we do have quite a willingness to spend in the UK. But how that's affected the mortgage market. So after 14 consecutive hikes from the base rate, we've seen the base rate being held at 5.25% over the last few months. And what that's meant for lenders is their rates have stabilized, they've become steadier, and we're seeing more lenders withdraw and reduce as opposed to withdraw and increase. And as the market is, becoming more positive, the lenders' risk appetite is also becoming more favorable, which is incredibly helpful to getting those mortgage offers issued. So the next Bank of England base rate review is in a couple of weeks on the 2nd of February. So hopefully if that's held, or even if we see a reduction, that's going to further impact the available rates. And what that means for the buy-to-let market is the way in which a lender calculates your lending using that stress test will be lower and it'll be easier to borrow more. Because what we've seen a lot at the moment is lenders' rates come down quite a lot, but the cost of their products increasing in terms of fees. So we're seeing a lot of improvements, but hopefully the better improvements will be later on this year.
Yeah, definitely. Thanks, Simi. And again, if you have questions also about the market and some expectations and things like that, feel free to put the questions on the chat or in the Q&A session. And let's start. And I will start with the Lendlord platform. Before we jump into the agenda, there are some new features that I think should be relevant to some of you. So on the manage side, which is the place to manage your existing portfolios and tenants and tenancies. So as you may know, we introduced a tenants app, so you can invite your tenant to their own dashboard, where you can share documents, important documents with them: the right to rent, the welcome pack, the AST agreement, of course, inventory report, gas certificate. Also, there are some compliance issues here that you need to share those documents with them, and it's a great way to do it. And then you can share also the payment schedule, so your tenants can review their rents and get notifications when they need to pay their rents. And also they can report maintenance issues, and you can manage everything from your Lendlord account and interact with your tenants. So this is something new. On the tenant side, we also have the AST generator. So you can actually generate a tenancy agreement using Lendlord. It's quite smart tool, so you can save sections, change them, and use them after that. So you can actually customize the agreement, and you can save it, download it, or send it to your tenant. So this is also something in the tenants area. And another thing is invoicing. It's also something new. So you can now generate invoices to your tenants, and you can save it on your payment schedule, or you can send it over to your tenants. It's also a very valuable tool. Those tools are part of the premium plan, which you have the promotion today. So I think that you have some limitations on the basic plan, but if you want to use it more, then you should subscribe to the premium plan. And I think we have many other features, but this is not the topic of this webinar. So let's start. Okay, so how to discover which lenders are available based on your profile. So our focus will be on the managed side of the platform. So on the managed side, you can upload your portfolio. And when you are a portfolio landlord, basically, if you have more than 3 buy-to-let, then lenders will also need to take a look on your portfolio. They need to stress your portfolio. They need to take a look on the entire loan to value of your portfolio, the consolidation per lender, many criteria items on your portfolio. So the good thing with Lendlord is that you can manage your data here, and we actually store more than 150 different data items on your portfolio, which is very valuable for you to store the data in one place and access it from anywhere in a secure way. But also it helps the engine to analyze the portfolio and based on that understand which lenders are available for you for a new mortgage and which lenders are not. So after you upload your portfolio on the My Portfolio page, you can go to the Finance tab, click Available Lenders, and then here you can see the list of lenders that the platform thinks that are available for you for new mortgage. Sorry, this is basically the aggregation of My Portfolio. This is a demo account, of course. And then here you can see the list of lenders that are available for you and lenders that are not available for you and what is the reason. And you can also play with the owners. So on Lendlord, you can manage more than one owner. So let's say that you have partners and you basically own properties together. You can manage it on Lendlord. You can put the owner, you can put the percentage of each owner on each property, which is also helpful to track the equity of each one, the cash flow of each one, but also it will help the platform to understand how to analyze the combined portfolio. So on the finance side, on available lenders, you can see, okay, so if Aviram, myself, if I apply by myself, this is the situation. But let's say I apply with Kate, which I have properties together, then perhaps the situation will be different. Not in this case. And basically you can play with it and see different criteria items that you meet or don't meet based on the applicants. So this is like an overview that you can take a look on lenders that are now in the market, and also if you meet the criteria or not. We also stress test the portfolio, which is also important, but we also stress test the property when you apply for a mortgage. So basically, this is the first topic. Simi, if you want to say a few words about lenders' criteria on the portfolio aspect, feel free.
Yeah, definitely. So for lenders, for applicants with large portfolios, so lenders will require the background stress test to meet a certain interest cover ratio calculation. So that will depend on whether you're a limited company and essentially the pay rate, which is the interest rate that they set. So they'll have to, some lenders actually won't stress test the background portfolio, only a small handful won't, but the majority will. And what that just basically means is the background property needs to be self-funding. It needs to have, you know, really healthy cash flow in terms of the rental versus the mortgage payments.
All right. Thanks, Simi. Okay, next topic, how to find the best product for my next mortgage or remortgage. So here basically I will go to the finance tab and pick mortgage, remortgage. And here you will have, you need to select if you apply in a private way or as a company, limited company. And then you just need to fill in those details. If it's a purchase or remortgage, what is the expected value? If it's a new purchase, and what is the estimated property value? If it's a remortgage, the monthly rent, how much you basically want to borrow. The LTV will be calculated if it's an HMO or not, and other important details. And also to select the initial period. If it's a fixed rate, then you need to select it's 2 years, 3 years, or 5 years. Then you click search and you will see live products from various buy-to-let lenders. And So you can see it's quite a long list. And if you let's try perhaps create, because if there are problems with the criteria, I will also see on the top of the list, yes, which lenders you didn't meet for this case. And I will just do one exercise, and I will lower the rental income here to 200, let's say. So basically, lenders will also stress test the property in terms of the ability to cover the mortgage payments. And you can see that basically I failed to meet the criteria of all lenders in terms of the rental income. So you can see that basically it's not a search that you go online and see which products are. Basically, we're trying as much as we can to apply the lenders' rules, and then you can get more accurate information. And another thing that you need to take a look, and Simi, I think it's also something important, the fees. So you can see here that in this case, Keystone presents 4.14%, which seems very low. On the other side, it's like 6%, almost like mortgage fees. So
Yeah,
it's
just to jump in on this, why the lenders have done this, because this is something we're discussing on a daily basis when the rates are lower and the fees are higher. The reason behind this when we've spoken to our lenders is because the way in which the lenders calculate your lending is using that stress test. So the lower the interest rate, the lower the stress test. And as you can see, a lot of these rates are below the base rate of 5.25%. So lenders aren't making any profit or money from the interest rates, but they're trying to lower them so borrowers meet the stress test so they can actually get the mortgage. So lenders have just effectively shifted where they make their money, which is on the fees, where normally it would be on the interest rate, but it just doesn't work with the stress tests. So hopefully, as you know, rates do get better, those fees will come down, but obviously it's just very unknown. But that's the rationale when we've spoken to our lenders why the fees are more higher than we've seen in previous years.
yeah, great point, Simi. You can also order by the list, so you can see it also by fees. So as you can see, for the fees from the lower to the higher, and you can just do the opposite if you click again, and also
Just
by
to jump in on this, Avaram, on the
yeah,
fees, just
yeah.
while we're talking about it, if you're a limited company and you have those costs, it's worth speaking to an accountant about what you can offset as an expense, because it's technically a business, you can make some sort of saving there. So that's worth doing as well.
Good point. All right, so you can also sort the lists. You can also take a look on the total cost, which will take into account the entire interest payments over the period plus the fees, and will calculate the total cost for the 2 years, or if you pick 5 years, for the 5 years, etc. You can also pick a company and run a search if you apply as a limited company. And here, basically, you should see some different products and lenders. All right, so this is the way to source products. Another place to see mortgage products is from the invest part of the platform. The invest part will allow you to source properties using our different tabs. So you have the on-market properties, which you can find the properties from agents, very similar list to what you will see in Rightmove and Zoopla, but you can get the deal analyzer results instantly. You can get some information, and then you can go into the rental analysis and adjust the data using our deal analyzer to understand your potential return, and also factor in the mortgage cost to see how it impacts your potential return. On the auctions tab, you will find properties on a daily basis from online auction houses all around the UK. And of course, you can apply filters. The property list is very enhanced, and you can basically start with typing an address and then select a radius, and then select a category. Let's say high yield properties. Not all the time it fetch everything, but it takes a few seconds, and then you can see some properties that are now up for sale based on this category, the address and the radius. And you can click on the link and it will take you to the website where you can see the property can be either on the market, Rightmove, Zoopla, etc. And you can also, using our premium plan, you can apply sourcing alerts. So when you source properties, you can click on this icon and you can add this property to your watch list. And on your watch list, you can receive alerts on when price is decreasing or price increase, or also before auction dates. You can receive a notification. And the last thing you can do with the sourcing alerts is you can define your criteria. Okay, so you start with an address and radius, a price from, price to, what types of properties you are looking at, number of bedrooms, number of minimum and maximum. You click save, and then every time the platform receive a new property that match your criteria, you will receive a notification to your, if you use our mobile app, to your mobile and or to your email. So it's very powerful if you want to be more active with your investments. Then on the deal analyzer, you can also start from scratch by typing in address, and then start putting the purchase price, the expected monthly rent, and then the platform will use its own defaults. But the nice thing with the deal analyzer, that you can click on the finance this deal button, and the platform will look for mortgage products to finance this specific deal. And it's very similar to what I showed you before on the mortgage search. And you can go to more products to see the entire list of products. So you can actually select the product to factor it into your analysis. So it's also something that you can discover from the deal analyzer. Yeah, so I think this covers this topic. If you have any questions, let's see if we have some questions before we go to the new topic.
I just put the stress test calculation, an example of how it's calculated. So the first step being to calculate the annual interest, which is set by the pay rate, which is in this case 5.5%. And then you multiply that annual interest by 125 or 145, depending on your tax status. And then that gives you the annual interest. Divide that by 12 to get the minimum monthly rental. So that's just kind of an example, but we'll obviously do all the stress tests for you when it comes to researching your options.
Simi, can you just post it to everyone? And basically, it's a comment for everyone. When you put a comment in the chat, I think the default is host and panelist. So just use the drop down and select everyone. Okay. All right. Okay, let's continue. So how to get notifications? All right, so let's say that you have, let's go back to my portfolio. In my portfolio, you can manage your due dates. And actually, this is a spoiler just for this webinar. I will show you the test environment of Lendlord. So soon we are going to introduce tasks. So instead of like today, it's like on insights, to the actual task to show you what you need to do this week or this month. And when you have a mortgage product it's about to expire, you need to do something, and we will explain. But the best way to set up your due dates is either you go, property by property. When do you define the properties? In each section, you will have dates. For instance, on the landlord insurance section, you can set up your landlord insurance renewal date. on the gas safety certificate the due date to renew your gas safety certificate. So same for electrical check, EICR, PAT, EPC, etc. So this is one way, but you can just use this button, which is also a new feature, set up a new due dates, and you will get this wizard. Click continue, and then it will just go property by property. You put the date, click update for each one of the dates. So this is a great way to update all of your due dates. And then when you have a mortgage product that is about to expire, you will see it on your tasks list. And there basically you have, I would say you have three options. Simi, correct me if I'm wrong. I will start and then perhaps you can say a few more words about it. So basically, you can either do a product transfer, which with lenders that allow that, and then basically you stay with the same lender, just you get a new rate, or you can remortgage to a different lender, and then basically you can click on explore your options, and then in remortgage, you can see that the property already selected the property and took all the details from my portfolio. So you don't need to work hard. You just need to add the missing fields, click search, and you will find your remortgage options. And why I'm saying there is another options, because you can do pound to pound, or pound on pound.
Yeah, pound for pound or like for like, they call it.
Yeah, or you can perhaps raise more capital, because at this stage, when your product is about to expire, there are no penalties. So basically, you can switch without paying the early redemption fees. And if you don't switch, you will go to the standard variable rate, which usually will be higher from your rather than from your current rate. So, Simi, you want to say a few words about product transfers versus remortgage or capital raising?
Yeah, definitely. So the main difference between a product transfer and a remortgage is that you're staying with your existing lender, so the borrowing's going to remain with them. So when you do a product transfer, it removes the valuation process and also the underwriting process, and it's a really quick way to switch your rate. Most lenders will allow it about 3 months to 6 months in advance, depending on who your lender is. But as Avram mentioned, it's like for like and kind of pound for pound. So you can't change the repayment type or the available lending or your required lending. It's just, a mirror image of what you've already got. So if you did want to change your repayment type or raise additional funds, you would have to move to a new lender. But with product transfers as well, just to note, so we don't charge any broker fees for them, and we offer to do them for our clients, for the reason being that although it's something, some people can do themselves, we make sure that we add your product transfer to our system the same way we add all our other cases, and we make sure we'll monitor the rates until you complete. So we treat it like an absolute normal application on our side in terms of how we look after that rate. But yeah, the main difference between those two is just it's such an easier process and faster process, and you'll find it so much easier than when you took out the original mortgage.
Yeah, thanks, Simi. And so basically, I would encourage you to go to your My Portfolio and then just go property by property, go to the mortgage section and update your product expiry date, which is here. So once you basically set this date up, then you will receive notifications, and you can manage your notifications from the settings page. From this top right menu, click settings, then go to email preferences, and you can see that I want to receive due date notification before 90 days, 60 days, 30 days, 40 days, and 3 days. So you can basically control the frequency when you want to get alerted. All right. Okay, let's go to the next topic: how to apply online for a mortgage or a remortgage. So I will show you how you can apply online from the platform, but you can also schedule a call with our team. And Simi, perhaps you can put the link to your Calendly
Yeah.
on the chat. And you can schedule a call to discuss your needs, but you can also do it online. So the way to do it online, I will go again to the Finance tab, click on Mortgage, Remortgage, and then when I select a product, and again, this is something that can be changed during the process. So even if you selected Keystone with this rate, perhaps after the team will review it, then they will recommend a different product for your consideration. Then click on Review Your Mortgage Illustration. So the nice thing with Lendlord is that you can submit an inquiry, and you usually within 24 hours, and it can be also after 1 hour or same day, depends when you submit your inquiry, you can review a mortgage illustration from your Lendlord account without speaking with anyone. So then you need to just quickly answer on some questions that will help the team to get your mortgage illustration. And again, the good thing with Lendlord that if you already store this data on Lendlord, like I did before, so all the data is available here instantly. So I just need to click next. Then the property address in case of a new purchase, how many buy-to-lets, but the platform will take it from my portfolio automatically. Some questions about credit history and the stage, if I already have had an accepted offer or not offer accepted, I click next. Then here basically, if you click proceed, you will receive this application. So here is your application to track your inquiry. At this stage, inquiry, like we didn't submit anything to the lender, you will just be able to review your mortgage illustration, and you will get notification to your email to review the mortgage illustration. So Simi, from your side, you will do it from the admin. I don't know if you received the application, the inquiry already.
I'm just uploading it now.
Yeah. So once you upload it, then you will be able to review your mortgage application. And as you can see, you can track all the steps from your Lendlord account. And it's also the good thing to be on track when you apply for a mortgage or a remortgage.
If you refresh it, I think it might show it. I've just uploaded it.
All right. So you can either log out and log in, or like once you get a notification, refresh the page, and then you will see on the mortgage illustration, 1 second. No, it didn't. Perhaps I don't know if you took the right inquiry.
No, I'm on the wrong inquiry because two are the exact same.
All right, okay.
2 seconds.
No worries.
There we go. It should be on there now.
All right. And this is also available from your mobile. So if you use our mobile apps, you can also track it. Okay, here we go. So yeah, so you can see now that basically the step is now progress to review mortgage illustration, and I can basically review this mortgage illustration, and of course I can download it to my computer. And then if I want to proceed with this illustration, I click proceed. Then I need to agree on the terms and conditions. And then basically this is the step to upload the documents. But again, you can do everything online, but you can do it also with the help of our team. So people that prefer to send documents via email, it's also possible. And if you maintain your documents on My Documents tab, so My Documents is also a very powerful tool. It's also part of our premium plan. You get 5 on the basic plan. So you can actually, for each owner, you can store the relevant documents that also relevant for buy-to-let lenders, and then in one click you can just transfer the documents to your application. All right, and after you upload the documents, then basically with conversation with the team will submit your application. You will see the processing. Not sure we need to do it now, Simi, but I think it's quite clear. And then once you get the mortgage offer, you can review it also from your Lendlord account. So also, like, it's very powerful to track your mortgage application in a digital way. All right, so I think we covered those two topics. And again, as you saw, like, there are some features on the premium plan, and you can also get some benefits when you apply for mortgage or bridging finance using Lendlord. So you can use the coupon that I shared in the beginning of the webinar. I will put it again on the chat. So go to your settings, click upgrade on the, and put this coupon, click add coupon, put this coupon, and then you will get a discount 40% of the annual plan for premium, which is £59 for the entire year. And if you apply for a mortgage, you will get £150 discount. So it's actually basically very valuable. All right. Simi, before we go, like, to see if, so now, guys, if you have questions, this is the time, either raise your hand or, we already
Yeah,
have.
there's a few in the chat already.
All right.
So, just in reply to Asita's question, so would it be possible to get lenders who lend bridging development finance on a project at the same time, give a decision in principle to refinance the property after the project's complete? So, the answer to this is unfortunately not. The lenders will require the property to be ready to essentially be let. Most lenders will require the property to be let within 30 days of completion. So, in order to get the decision in principle, it has to be, you know, at that final value to be able to get that essentially. So what we normally do for a lot of our clients who get bridging finance is we run the numbers with the lenders prior just to make sure it's viable, make sure it meets the stress test, and hopefully if rates continue to go where they are, then it shouldn't be too much of an issue further down the line.
All right,
And
thanks. There is another one, yeah.
we've got another question on, did I mean remortgage or will I do the remortgage? So some lenders will, you can do the product transfer with them directly, but we advise probably best not to, just so we can have track on our system to see when the rates are dropping, as lenders notify us, you know, 24 to 48 hours before the rates are due to be repriced. And also we contact you 6 months before your fixed rate ends again, or the initial period. So it just makes sense for us to do it so we can always track it. It's just kind of best for the clients.
All right, thanks, Simi. And I think we have people like, okay, so Osita, you raised your hand, so I will let you speak. 1 second.
I think you may be on mute.
Yeah.
Yeah, can you hear
All
me?
right. Hey, yes.
Thank you so much, both Aviram and Simi. Thank you for a wonderful presentation.
Thank
So,
you.
and thank you for answering my question. That clarifies it. But I wanted to add, so a situation whereby say, let's say a project that is going to take like 8 months to complete. Obviously, I know within 8 months, a lot can happen in the market, and I can understand the fear of the lenders. But will it be a situation whereby you have a lender who can lend either development finance or bridging, but at the same time, at least accept in principle to do the remortgage, even if they don't kind of come to terms with the figures, but they can say, based on the value and how good your deal is, when you finish, we'll be able to kind of offer you a package for the refinance.
Yeah, that's a really good question. We get this actually quite a lot, but unfortunately, the lenders will have to do the valuation and confirm it's going to be worth what it is before they can confirm to you that they can, you know, potentially accept it. So, unfortunately, on that basis, they wouldn't. You'd have to wait till the property's finished, unfortunately.
I see. Okay, that's cool. And just to give you a background, the reason why I'm asking this is because I I finished a recent project where I was thinking that, like before the bridging lender lends you, they come in for valuation. And then based on that valuation, that was what I think should be a kind of enough inspiration to have such agreement with lenders.
Yeah, it makes sense. It's definitely, it makes sense when you've already had the valuation done, especially on the bridging. But because lenders will have their own panel of surveyors that are independent to you, to us, and to them, it'll have to be a valuation from their panel, and they don't accept any other valuations except from their surveyors. So it's a little bit tricky because I know where you're coming from, but unfortunately, it's what the lender will value the property at.
All right. Thank you so much. I won't take much of your time. Thank you. I appreciate it.
Thank you, Sita. And like Lendlord also offer bridging finance. Perhaps this is the opportunity to tell you that. So basically, if you go to finance, bridging finance, you can apply for bridging. It's also a quite quick questionnaire to get initial terms, indicative terms, and then again, all the entire process is online. So you will get the bridging application, which you can also upload all the documents and review the indicative terms and more. And on bridging, Lendlord act as a lender. So you will get personal service, very flexible underwriting. And again, for the premium plan, there are some benefits. So if you subscribe to our premium plan, you will get those. All right, so we have more people. Okay, so Lovinia, you also raise your hand if you want to ask.
Okay, I did raise my hand, but I took it back down.
All right.
I'm just trying to understand what I'm listening to, because I've heard of Lendlord, but I don't know what you do. Is it just mortgages? Is it about mortgages?
Lendlord, so Lendlord basically is a platform for landlords and property investors.
Okay.
You can also find properties, like, to source properties that you want to buy. You can analyze the potential return. You can obtain market data on the postcode information page, which is extremely important when you analyze a new potential acquisition. To review the metrics of this area, and our postcode information page basically will allow you to get very valuable information about in terms of capital growth, some area facts. You will see historical prices, rental stats, and more. And then once you acquire the property, or if you have an existing portfolio, then you can use the Manage tab to manage your existing portfolio. You can manage your cash flow. You can link your bank account using our premium plan. So you can do many things with Lendlord. And on top of that, you have the finance tab. And the finance basically is integrated into both sections, the invest and manage. And on the finance, based on the data that you enter to the platform, the engine will help you to understand your finance options. And using our mortgage broker team, you can also get mortgages submitted to lenders, remortgages, and get advice. But you don't have to use it, of course. You can use your own broker and manage your data, invest with Lendlord, etc. It's like, so our vision was like to provide the one-stop shop for property investors, that they can do basically almost everything they need in one platform, including the finance.
Okay. At the moment, I'm subscribing to another website, which is another provider, which is similar to yours, that offer to go into your portfolio, to look at properties, to analyze properties, but they don't offer the mortgage side that's like what you do. So I'm trying to get my head around. Are you saying I could do my own remortgaging myself, or do I need
So you would manage the inquiry for yourself in your
okay.
online application, yeah. So when we refer to that as like tracking your own mortgage, it's, for example, me liaising with the lender and then updating your whole journey, your digital journey. So that's what you'd basically be taking charge of, is kind of your online digital mortgage application. But we're doing that for you, if that makes sense.
Yeah.
All right.
Yeah, I'm trying to get my head around. You
All
just
right.
always go to a mortgage advisor. Are you the same Like if
You will also get advice. So we have Simi is one of our is the leader of our mortgage advisor team, and so basically you don't worry, like it's digital, but there is a team behind.
Yeah. And we belong to a mortgage club via Legal in General, so that gives us access to all of our products. And the mortgage team were technically separate to Lendlord, part of Lendlord Finance, so fully regulated by the FCA and an intermediary. So yeah, we're a mortgage broker, but we have the digital aspect as well.
okay.
And Lavinia, if you want to get more information about the platform, go to our YouTube channel,
I
subscribe.
will. I'm seeing it now, but I didn't realize there was so much involved in it. I didn't know there was so
All
much
right.
involved.
Thank
Thank you.
Thank you very much. And Simi, I think that we have, if you have
Yeah, there's
a
a
few more
few more.
minutes, some questions on the chat.
Yeah, so can you use if you have no property at the moment, how can I use Lendlord? Do you want to take that one?
Yes, of course. So if you don't have properties, you will use the invest part of the platform. So you can source properties. I think I actually already demoed this. So you can use the property sourcing tab. You can analyze potential deals. Like you can manage a prospect list. You can manage watch lists to get alerts. And you can also obtain market data using the postcode information page. You can see recent sales, average asking price in this area, etc. So I would focus on this part of the platform before you, like if you don't have properties yet. All right. Let's take another one. Can you get finance on a house you have bought outright without a mortgage? Also, can you get multiple mortgages on properties to raise finance for one property?
Yeah, so on that you can refinance the property that has no mortgage on. It's the same as a refinance, any other application. Just the conveyancing part's a little bit faster because you don't have to liaise with your existing lender. So you can definitely do that. In terms of the multiple mortgages, so we don't offer things like second charges, but a lender at the moment has a really good offering, which is a multi-property product. So let's say you've got 5 properties, you can merge them all together on one mortgage product. So you have one large loan, and you can use all the rental for those 5 properties for that stress test and for that loan. So that's working really well for our portfolio landlords at the moment, is having that multi-property product. And that will be with one lender. So you can essentially refinance all 5, raise funds, and then buy a new one. So that's an option to do.
Yeah, thanks. And in terms of capital raising, we will start to do some second charge, I think, on the bridging side of the platform. So if you need to raise capital as a second charge, it might be possible during like Q1 of 2024. Suggesting to apply from the bridging through the bridging questionnaire. Perhaps we will put the link. So if you want to apply for bridging, then you should use this link. See if you can put the links
Yeah.
for buy to let mortgage. And perhaps again, your Calendly link if people want to schedule calls. Let's see if we have some. Patrick asks, purchased freehold on a mixed use property, retail ground floor and resi uppers, considering financing and splitting the commercial from resi. Can we apply before the title split is completed on the understanding the legal work coincides with exchange or completion as terms or very different if split?
So that one really depends on the lender and what their conveyancing conditions are. Like you mentioned, some lenders will do it based on completion, or some will want it on application. It really depends, lender to lender, what they'll do and how they'll view it.
All right, thanks, Simi. Let's see if we have anything else. So if we miss, feel free to schedule a call or use this chat in the app to ask questions after the webinar.
In terms of the most recent one who we've got access to, so we work with pretty much all of the lenders on the market except a couple of lenders, but you wouldn't be at a disadvantage because those lenders, they're not great for buy-to-lets, so you wouldn't be at a disadvantage. In terms of Jonathan's question about expats, so I'm not sure the platform does show the expats yet. That's something we're definitely building and working on. But when you do put the inquiry through to us, if we can see that you've got an international address, I know from looking at that which lenders will do an expat mortgage, and we've got our wider sourcing system, which will always make sure to check it through so nothing's missed. So yeah, we do have a handful of lenders who will do expat mortgages. The main criteria around the expats is just to make sure that you have some sort of a credit footprint in the UK. That's mainly what lenders are looking for. But we can talk that through if you want to email me or schedule a call.
All right, there's another question. How do lenders treat mortgage applications on a property that might need refurbishment to make it fit to let? How do valuers assess value and potential rentable value? I think you can answer it, and perhaps bridging can be also an option if you need
Yeah.
to
So
some
the
property.
Sorry.
Okay,
So the
go ahead.
property will need to be let in a habitable condition when the valuer goes through. So they'll want to make sure that it's ready to be let essentially. If it needs refurbishment, if it's like cosmetic, painting, carpets, that sort of thing, lenders are normally fine with it. But if it's something structural or, there's missing a kitchen sink, for example, that's just going to be a no-go. So you need to kind of make an assessment before we submit it. And also whatever we submit it at is, that is going to be the value based on the value as it is. They won't do it based on the future projected value. And the way valuers will assess the valuations is based on sales comparables data and the condition of the property, the demand of the area and things like that. So the best thing to do is, like Avram mentioned, if you do need to do works, go for the bridging loan, and then once you've created that uplift in value, refinance it on that higher amount so you can actually make the most of that refinance.
Yes, and we have many cases of investors that use bridging for to purchase and complete the refurbishment, and then they refinance with a buy-to-let remortgage, and then basically this is their exit strategy for their bridging finance. I'm just trying to show you again how you can use the promotion. So again, go to the settings page, and it's for a limited time. So just if you want to get the 40%, just do it today. Click add coupon, click finance webinar, click apply. And then you'll get 40% of premium annual subscription, which you get all those features and also benefit for finance and other services. Click upgrade, and then the price is £59, very affordable for the entire year. And then this is for the first year, and then £99 for the second year. So highly recommended because you get so many great features that will help you run and grow your property business. Okay, I think that we will end this webinar now. So I wanted first to thank you, Simi, for joining. It was very helpful and informative. And thanks everyone. We will upload it to our YouTube channel, and stay in touch. Schedule a call with our team if you need any help with the platform or with finance. And yeah, so we will see you hopefully in the next webinar. Thank you very much and have a great evening.
Thanks, everyone. Bye.